Good evening, all. Ira Epstein with your metal market wrap up, and this wrap up is for Monday. And we're sitting here now at January 5th, 2026, and the time as I'm talking to you, we're about 6:35, 6:40 p.m. Central Time. So, as we look at the markets, we had the first chance to see the market reaction to President Trump's action of capturing Venezuela's President Maduro and his wife, bringing them to the U.S. courts, where they, of course, pled not guilty. And now the next steps take place. As for the market with the energy, the market was up because the president wrongly stated on Saturday that the U.S. was going to run Venezuela. It's never been the U.S. goal to go in and take over a country that I can remember here. It's one thing to try to put peace into a country and get rid of elements, but it's very different to take over the country. And he backed off on that very quickly. As I mentioned last night, we saw Secretary of State Rubio come in and change all that and straighten things up. But the reality of the situation is this in oil. Even if Venezuela wanted the U.S. to come back and do things with them, it's going to take years and billions of dollars. And in order to get the oil companies to take on that risk, what kinds of assurances can be given to them that they won't see? Again, Venezuela steal their properties, take them over, make working there an impossible situation. Don't know. But what I do know is that President Trump is not going to allow China to get that, and he's not going to allow Russia to get it or Iran. That isn't going to happen in this part of the hemisphere. So this was thought out by him, played by him. And now the question is the market has to get back to the reality of the situation of oversupply of oil. Really that simple. As for the stock market, well, today was the last day to make if it was going to have a Santa rally. And boy, did Santa come in from the North Pole and surprise traders and kick the markets up. Gold did its usual thing with crazy action, but we'll get to that in 1 minute. Tomorrow morning, we're going to get the Red Book sales. They'll come out with the week ending January 3rd at 7:55 in the morning. S&P Global Group will release their U.S. final December service sector PMI number at 8:45. They're working against the prelim number of 52.9. And we'll get Richmond Fed President Barkin's remarks at the Raleigh Economic Forecast event coming up. And remember, we're going to get ADP numbers soon now. We're going to get the Challenger Gray numbers for the corporate layoffs, and then we're going to get the jobs report, and that's what the market's going to be looking at. So these are the elements that we have to deal with. I want to remind one and all that before I go into the charts tonight, I am in the midst of what we call our deepest discount sale, typically of the year, 40% off on any of the research products that we have. So it can be the 1 month products, the 3 months, which are really the best deal of the group in terms of 1 to 3, or the 1 year products, which are really the best deal at this point. Charting courses, Bollinger Bands, the full charting course, the outside day course, 40% off. So you just go to iraepstein.com. That's one way to do it. If you move your cursor to the top up here, there'll be icons that show you can click there. If you're watching me on YouTube, you'll be able to click here. So let's get back to the charts. We did see that the dollar tried a big rally and a failure, closing literally at the lows of the day and lower on the day. You tried to take down pretty hard the euro during the day, and it came back up. It's down a little bit tonight. So what you've got now is one of these wild swinging markets that are trying to figure out what next on the hit parade. Let's go to the metals and take a look at what we've got. In the gold, we did not go up, even as dramatic as you were today. You did not go back up for the high of the 45.56 level. You're sitting here at roughly $100 under that, but boy, it feels like you made that run. As you come to the chart action and you look at it, you've got this higher high, then you broke down. And what the market actually did is when the market cleared this high of this day, which it did today, it caught shorts. Market came up quite a bit, but the pattern is one of a higher high and a lower low. What about where the support is? Well, it's the 18-day average of closes. You did manage to have a couple of closes under it, but you had no follow through to it at all. Instead, the market went up, took out this high, and it took off to the upside. The upper Bollinger Band is a possible resistance area with near-term support. I would look for 43.88 in the market. Are we trending though? No. Is the bias up? Yes, but there's no trend as I see it at play on a short-term basis. Then slow stochastics have now flattened out. So they're not pointing down anymore. They're just sort of drifting sideways at this point in time. The gold-silver ratio still favors the silver over the gold. That would change if you closed over the 18-day moving average of closes, which it hasn't done. In the silver market, the market had lost its bullish embedded reading, which often means before this high of this day right here of 82.67 is taken out, that price and the 18-day average will ultimately make a run at each other. We'll see if that works out. The trend is up, the bias is up, and support will keep coming in towards this 18-day average, in my opinion. In the copper market went up for new highs, period, on this particular leg of this move. Now, if we come back here, you can see you did make a high back here of 604.30. You didn't quite get there today. You got up to the 670 level. But again, we're back up to the $6 mark. Copper's going to be in short supply. As long as the AI boom continues, you need in data centers an awful lot of that. So we'll see what happens. And of course, you can't change what's going on in Chile and Peru in terms of the mines, the contract strikes that you get from time to time, and the cave-ins that they've recently had that have hurt production. But trend up, overbought, over a Bollinger Band, no. I would not be having my clients and telling them, hey, you got to buy it up here, it's going higher. That's not what you'd hear from me. In the platinum market, once you lost the bullish embedded reading right over here, the odds favored on this day when everything turned down that you'd make a run for the 18-day average. Well, you got pretty close in the run, but it didn't hit it. I mean, this is not close enough to get me comfortable. You'd have to either take out 25.6350 now or come back to this number. I'll play that the market's had a neat rally. They look great. They've been up strong, and they can stay that way. However, I am looking for pullbacks in the market. And by the way, this is the January platinum. I'm going to move you to the April, and this is how that looked. I'm going to do this right now as we're talking so that you can see it. It's a very similar picture in it. So we'll move to the Jan at this point. I don't know why it stayed there. I thought I had changed it for you. I know on my daily charts I have for my subscribers. But this is how you're looking on the April platinum, and that's the one you should be trading. In the March dollar index, you made a run. This is classic what I teach in my charting course. The first challenge of key moving average happened here on Friday. You went to the 200-day average. You punched through it today, went to the Bollinger Band. You weren't embedded. That's normally where the pros, the combination of the 50 and that number are where I think they peeled off their positions. Do I think they're still long? Well, the bulls are in control until and unless you take out 97.86.5. If you do that, there's a problem for the market. So yeah, I do think the bulls still have the control of the market. They have to defend the market there. So when you put it all together, I think today was most likely a one-off where we had traders coming back from holiday, Christmas holiday, New Year's Eve. The A-League traders came back, and probably a lot of window dressing, probably a lot of getting back in. But I learned many years ago, you got to be careful on days like this. As all the money rushes to the market, does it hold whatever it pushed the market to do? And that's going to be what we see now through Wednesday. I'm Ira Epstein. Thanks for watching. Hope you take advantage of our sales, and they will end this week, so you take care.